What if I told you that the next global financial crisis won't start in Wall Street, won't start in a central bank, won't even start in a government? What if I told you that the next economic collapse, the next great crash, the next meltdown that freezes credit, wipes savings, and shuts down businesses could begin with a single unknown hacker typing quietly in a dark room somewhere in the world? No bombs, no armies, no tanks rolling across borders, just code. Because for the first time in history, the global financial system $100 trillion in deposits, markets, payments, and trade stands vulnerable to a new kind of threat. Cyber bank heists, not small hacks, but system-wide, coordinated attacks that could break banks, freeze economies, and collapse trust itself. You think that sounds impossible? Then ask yourself this. If North Korea, one of the poorest countries on Earth, could steal $1 billion from global banks without stepping outside its borders, then what could a superpower do? Or a rogue group, or AI-powered malware that never sleeps? Tonight, we're going into the shadows, into the world of state-sponsored hackers, financial backdoors, digital bank robberies, and the single weakness that could break the global economy. Because the biggest financial threat of the next decade isn't inflation, isn't recessions, isn't interest rates. It's the silent war already happening inside the servers that hold your money. This is Cyberbank Heist, the coming hacking wave that could crash economies. Stay with me. Section 1. Setting the stage. How money went digital and vulnerable. Before we talk about cyber heists, we need to understand one dangerous truth. Money is no longer physical. It's not cash, it's not gold, it's not paper. Today, 97% of all money exists only as digital numbers inside bank servers, balances in databases, entries in spreadsheets, code. If those numbers disappear, your money disappears. If those databases freeze, your economy freezes. And over the last 40 years, we've built a financial world that is incredibly efficient, but also incredibly fragile. Let's break this down. 1. The 1970s, 1980s. Banking goes electronic. Banks shift from paper ledgers to computers. Faster transactions, lower costs, more convenience, but also more dependence on digital infrastructure. 2. The 1990s, the internet arrives. Banks connect globally. SWIFT becomes the global messenger for trillions in transactions. ATMs go online. Credit cards become digital. Convenience skyrockets. Security, not so much. 3. The 2020s, full digitalization, online banking, mobile banking, real-time payments, digital wallets, cloud-based systems, AI-powered fraud detection. We built speed, we built efficiency, we built automation. But we also created millions of entry points. Every API, every server, every router, every employee login, every outdated machine, all potential weaknesses. And the world's most ruthless actors noticed. Section 2. The origins. The first digital bank robbers' cyber heists didn't begin with hackers in hoodies. They began with intelligence agencies, governments targeting other governments. Yes, the first cyber bank robbers were countries. Stuxnet 2010. The blueprint, though not a financial attack, Stuxnet changed everything. The US and Israel created a virus that sabotaged Iran's nuclear program by infecting industrial controllers. The message was clear. Software can destroy hardware, systems, and infrastructure remotely. And if you can sabotage uranium centrifuges, you can sabotage banks. The new era. State-sponsored bank hacks over the next decade. 3 countries mastered cyber financial warfare. North Korea gives stealing money to fund the regime. Russia gives disrupting economies for geopolitics. China gives espionage for long-term strategic advantage. And they all learned one lesson. Banks are the easiest high-value target in the world. Why? Because stealing $10 million from a vault requires weapons, cars, insiders, planning, risk. Stealing $10 million from a server requires a laptop, and sometimes not even that, just compromising one employee's email. Section 3. The rise major cyber heists that shook the world. Let's walk through the timeline of the most shocking digital bank robberies ever committed, each one bigger, smarter, and more terrifying than the last. 1. 2013 to 2015. Carbanak heist, $1 billion stolen. A Russian hacking group infiltrates banks in 30 countries. They don't steal customer money. They take over entire banking systems. They take control of ATMs and make them spit out cash on schedule like vending machines. Total stolen, $1 billion. Lesson learned. Hackers don't just break into accounts. They can control the bank itself. 2. 2016. Bangladesh bank heist, the most dangerous bank hack ever attempted. This one is legendary. Hackers target the central bank of Bangladesh. They infiltrate the SWIFT network, the global system used by every bank on Earth. Their goal: steal $1 billion in a single operation. And they almost did. They successfully transferred $101 million. Only a spelling error foundation stopped the rest. If that typo hadn't happened, the entire global banking system might have been shaken. Lesson learned: even central banks can be robbed like small businesses. 3. 2017. WannaCry, a worldwide ransomware explosion. North Korea uses a leaked NSA toolus, a tool built by the U.S. government to launch ransomware across 150 countries. Hospitals go offline. Companies shut down. Billions lost. Lesson learned: if a cyber weapon leaks, anyone can use it. 4. 2020 to 2023. The rise of AI-powered financial hacks. Deepfake CEOs trick employees into sending millions. AI malware learns corporate systems and bypasses security. Ransomware gangs run like full companies with HR, help desks, and support teams. Lesson learned: cybercrime has become industrialized. Section 4. The breaking point, the attack that could crash economies. Now we reach the most important part. What happens when a cyber attack targets not a single bank, but the entire financial system at once? Because experts warn that a coordinated cyber assault on SWIFT, Visa, MasterCard, major clearinghouses, cloud banking infrastructure, or a top 5 global bank could cause an economic collapse similar to 2008, but faster and without warning. Let's imagine what such an event would look like. Scenario: the 48-hour meltdown, hour 1. A major bank's servers freeze. ATMs stop working. Online banking stops. Employees can't access accounts. Hour 3. Customers panic. Branches flood with people trying to withdraw cash. Hour 6. Rumors spread. Social media explodes. People rush to other banks. Hour 12. A second bank is hit. Then a third. Markets begin to fall. Hour 18. Countries close bank branches. Governments issue emergency statements. Hour 24. Stock markets halt trading. Central banks activate emergency liquidity. Hour 48. International trade freezes. Companies can't pay suppliers. Salaries can't be processed. Global confidence collapses. Now imagine this not as fiction, but as a real threat happening in silence right now, because the world's biggest cyber agencies have already warned. A coordinated cyber attack on global financial institutions is inevitable. The only unknown is when. Section 5. Fallout. What happens when money stops moving? People think a cyber attack is about data loss, but the real danger is trust loss. Because the modern economy runs on trust, the belief that when you open your banking app, the number you see is real, and the belief that the system will work tomorrow. What happens when that trust disappears? 1. Credit freezes. Banks stop lending. Businesses can't borrow. Investments halt. 2. Payments collapse. Salaries don't process. Bills don't process. Government payments freeze. 3. Supply chains break. Companies can't pay suppliers. Shipping stops. Food shortages appear. 4. Stock markets go into freefall. Not because companies failed, but because systems failed. 5. Governments panic. Emergency regulations. Capital controls. Withdrawal limits. Bank holidays. This isn't theory. These events have happened on smaller scales in Russia 2014, Venezuela 2017, Costa Rica 2022, Iran multiple times. A digital outage can cripple a nation faster than any economic policy. Section 6. Failed fixes, why banks can't protect themselves. You might think, surely banks are prepared, right? Surely governments have defenses, right? Here's the uncomfortable truth. Banks spend billions on security, but hackers only need to find one weakness. Some major problems. 1. Outdated systems. Many banks still run on 1970s and 1980s technology. Old mainframes, unsupported software, legacy code. Perfect targets. 2. Human error. 90% of successful attacks start with a careless employee, a weak password, a phishing email, a stolen laptop. 3. Interconnected systems. If one bank gets infected, it can spread to all banks through SWIFT or payments networks. 4. Privatized responsibility, public damage. A bank failing hurts everyone, but banks have no incentive to cooperate strongly on cybersecurity. 5. AI making hacks 1000x stronger. AI can now write malware, create undetectable code, hack passwords, deepfake superiors, find vulnerabilities automatically. The future hacker isn't even human. Section 7. Modern parallels, history repeating with new tools. Every major financial crisis has one thing in common. The system breaks at its most fragile point. 1929 gives market speculation. 1971 gives gold convertibility. 2008 gives mortgage derivatives. 2020 gives supply chains and global shutdowns. Today's fragility, digital dependence. Let's look at shocking modern data. 1. $10.5 trillion. Predicted global cybercrime cost by 2025 to 2,200. Average cyber attacks on banks per day. 3. 95%. Of all financial institutions have been targeted in the last 12 months. 4. 40 seconds. A ransomware attack happens every 40 seconds. 5. 20 countries actively developing offensive cyber-financial weapons. And here's the most terrifying statistic. 40% of global banking traffic flows through only 3 cloud providers. If even one goes down, banks, markets, payments, fintechs, fundtechs all go down together. We have created the ultimate single point of failure. Section 8. The warning, what's coming next? We are entering an era where warfare is digital. Heists are digital. Sabotage is digital. Terrorism is digital. Economic collapse could be digital. And the tools are becoming stronger, cheaper, and more automated. The coming hacking wave isn't about criminals stealing money. It's about breaking the system that moves money. And when the system breaks, economies break. Section 9. 3 clear takeaways. 1. The global economy is more vulnerable than we think. We have traded physical reliability for digital convenience. But we didn't build enough resilience. 2. Cyber attacks are no longer isolated crimes. They are strategic weapons. Countries, agencies, and criminal networks are already fighting a silent financial war. The public just doesn't see it. 3. The next financial crisis will not look like 2008. It may not start in mortgages, banks, or markets. It may start with malware, and it may unfold in hours, not years. Conclusion, final warning. If the last century was shaped by wars over oil, currency, and land, the next century will be shaped by wars over data, networks, and financial infrastructure. We are living inside the most interconnected, fragile, and hackable financial system ever built. And the next global crisis might not begin with a failing bank, but with a blinking cursor. Call to action. If you want more deep dive videos on the hidden risks inside our financial system, the history they never taught you, and the economic warnings shaping our future, subscribe, like, and turn on notifications, because the next episode might explain the very crisis we've been warned about today. Stay alert, stay informed, and stay prepared.